Like I'll take yes, I'll take no. I don't care. No's great. I love no's. No means no more work to do. You're gone. Bye-bye. Nice meeting you. Keep you on my mailing list. I'll put you in my newsletter, right? Yes is fantastic. Yes is pop the champagne. That's awesome. It's those stinking maybes, Matt.
If you're an active real estate investor and you're looking to do larger deals, you're in the right place. We are going to go and take the conceptual type of stuff that you listen to from other real estate podcasts and bring it down to the tactical, the nitty gritty, the actual actionable types of things that other real estate investors that went big did to grow their own real estate empire. You're listening to the Go Big Live podcast. I'm your host, Matt Drouin. Hey everyone, welcome to the Go Big Live podcast. I am your host, Matt Drouin. I have an amazing guest today that I'm actually fanboying over right now. It's Mr. Matt Faircloth. I've been following him for many years. Just a little bit about Matt. He is founder and CEO of DeRosa Group, renowned Bigger Pockets contributor. And to top it all off, he is an Amazon bestseller. Actually, some people there in the live Q&A today are actually raving fans of his book, Raising Private Capital, How to Build Your Real Estate Empire with Other People's Money. A full-time investor since 2005, Matt has successfully completed projects ranging from fix and flips and single family to office buildings and apartment communities. With a portfolio boasting $150 million in assets under management and over 1,800 units, Matt is a true expert in his field with a passion for education and helping others find success. Welcome, Matt.
Woo! Welcome. And thank you, Matt, for that long introduction. And that's really flattering. Thank you. I also want to just tell people that for those that have already read my book, Raising Private Capital, it's got a new cover now, and it's a revised edition. I wrote a lot more content for it. So we just released this new version of Raising Private Capital with a new foreword written by Pace Morby, the juggernaut, the machine, the tornado of real estate. Pace Morby wrote the new foreword for that book. So pretty cool, huh?
Yeah, absolutely, man. So I like to start the show with you were born and now you're here. What happened in between?
A lot of stuff. No, I was born in Baltimore, Maryland. I went to college at Virginia Tech because people said that you're good at math and engineering, so you should be an engineer. And so I trusted adults and I did that. And then I got my degree in engineering and I said, whoa, I don't want to be an engineer because it's like on a desk, sitting in a little cubicle all day, working in a factory. So I got a job outside of engineering a bit in technical sales. So I was a salesman for 7 years selling industrial machinery called air compressors. I sold those for 7 years, traveled all around the country, lived in North Carolina, lived in Philly. And when I was living in Philly, met a lovely young Elizabeth Randazzi, Paisano Elizabeth Randazzi, who put Rich Dad Poor Dad in my hand and got me to read Rich Dad Poor Dad. And so it was really changed my mindset, changed my way that I viewed money and how it works and what money really is and what assets are and, trading hours for dollars versus building assets. And completely changed my life. And so I started playing the cash flow board game. And very soon after that, realized that there was more in me. And so I quit my job. In that time frame too, after reading Rich Dad Poor Dad, I bought a single family home and lived in a bedroom, rented out the other two bedrooms to two knucklehead drinking friends of mine. And those two knucklehead drinking friends of mine were paying me $500 a month. My mortgage was $940. And so they each were paying me $500. So I was making $60 a month and living there for free. And that opened up my possibilities to what was available. That got me to quit my job. Me and now Liz Faircloth of 18 years of marriage, decided to live this crazy thing that couples don't know how to do anymore, which is called living below your means. And so we lived way below what our means were, and we were able to live on just one salary. And that enabled me to quit. We lived on her salary, where I built our company, the DeRosa Group. Fun fact, DeRosa is her mother's maiden name. And that's where the name DeRosa comes from. So now DeRosa is a residential landlording company active in 4 states. Liz and I are big about like the why you do what you do. We want to leave an impact in the world and want to help other people. And so the context for DeRosa is to transform lives through real estate. We see real estate investing as a means to make a good impact on the world, that you can help people reach their financial goals while you give your tenants a better quality of life. Right. And so we merge those two into transforming lives through real estate. That's why we do what we do. And we are over a couple of thousand units in Kentucky, North Carolina, Pennsylvania, New Jersey now. The end.
Sweet. So like we were talking about before the show, I've heard your inspirational story about how you bought, your first, you know, property with like a $30,000 loan and that sort of thing.
That's from her dad.
Yeah.
Salvatore Randazzi loaned me $30,000. He probably would have broken my legs had I not given it back to him. So I gave it back.
So let's talk about, our target audience here with this show is, investors that have a few properties under their belt. They're intimidated as hell about raising capital. So let's talk about your first like big deal, kind of like where it puts you on the map with as a, more of a commercial operator and that sort of thing, and dive into that. So tell me about like where the seminal moment was and shift when it came to switching to bigger type of stuff.
Sure. We had raised some money up, and this was not our first raise of other people's money, right? And we got started in New Jersey, built out, around 100 units in New Jersey, small scattered site stuff. And we then expanded across the bridge into Philly. And so that was our portfolio there, had around 200 units and everything like that, all in, including our Philly stuff. And we wanted to keep expanding, and we were managing it all ourselves. With had a couple like maintenance techs and, a leasing agent that worked for me under my umbrella and all. And then we found a 49 unit single site out in Lancaster, Pennsylvania. And it was a converted factory. Like it used to be a shoe factory, and then somebody else converted it into an apartment building. And it's one of those old like loft style conversions with like the spiral staircases and the ginormous windows and everything like that. It's a really cool space, right? So we figured out how to make that deal, put the deal under contract. And I immediately was like, oh, we need to start up DeRosa Group Management here in Lancaster, Pennsylvania, which was every minute of 2 hours away from my office, right? Mm-hmm. So my lovely wife and a muse in many ways in my life just was a little bird on my shoulder and said, honey, you probably could manage this yourself, but why don't you try third-party management for now? And if it does, you can always fire that manager and manage it yourself later, right? Mm-hmm. And I said, you're right. Let's do that. Let's hire a management company, see what they do. And that deal, so we agreed to do that. That deal caused me to have to raise $1 million, which was my first $1 million raise. It took me a while. I had to get a few extensions on closing, but we were able to pull it across. And this is like pre-Bigger Pockets, Mm-hmm. So before any notoriety, and I'm just going through my cell phone like, hey man, you got any money? Right? Like we put together $1 million by just reaching out to our network and doing a lot of cold calling and stuff. But we got to the table and we closed. And in that epiphany, Matt, what I got was I should not be running a property management company. And the reason why my wife told me, hey, you might not want to do this, you might want to hand it off, is because she saw that 80% of my time was going into a thing that had the potential to make me 20% of my money, right? Mm-hmm. That you really should be focusing, Matt, on a thing that you make a lot of money on, which is raising money. And so that enabled me to take my focus off of the management side of the business and just focus on ops and capital raising. Mm-hmm. In that deal, put us at about 250-ish doors. In the next 3 years, we added another 1,000 units to our portfolio because I was able to focus on raising money, finding deals, and then finding phenomenal third-party management companies to run them for us. And we expanded our team that could help me with a few of those other things too. So now all I really do for our company is raise money. And I have somebody else who manages the day-to-day. I have somebody else who finds the deals, and I have somebody else who underwrites those deals for us. So we kind of broke the job responsibilities down into 4 quadrants. And that 49 unit deal was the beginning of that breakup of those different to those different sectors of a company.
Yeah. So let's back up a little bit on that 49. It's 49 units, right?
Yep.
So how did you find the deal?
It's you won't be impressed. Broker. the same broker that sold me the Philly deal. I had an 18 unit in Philly that I had to bang my head on his door to get him to take me seriously. And I finally convinced him to let me make a bid on the deal. We bought the Philly deal. He realized that I'm okay and that I'm a good buyer. And so he gave us a look at the 49 unit. We bid the 49 unit. and somebody else came in and bid a higher number, they fell out of contract. And then we were the next in line. And so we got the deal at a significant discount. I had to sign a piece of paper, Matt, that said I wasn't related to the owner, because the bank said, wait a minute, this is too good of a deal based on what it's selling for way less than what it's appraised for. I need to make sure that this owner's not like your uncle or something like that. Trying to do you a favor.
Yeah. So tell me about let's back up even further. Tell me about the headbanging process with the broker, because I really want to dive into how to effectively build relationships with brokers, because this deal probably wouldn't have happened if you didn't bang your head against the wall in the first deal.
To buy the 18 unit, that broker sold me the 18 unit, a 49 unit, and then a 198 unit after that. So he believed me after a while, right? But the way to get broker to pay attention to you is to not call them just one time, right? A lot of people will call a broker up and say, hey, I'm new to the multifamily world. I've never done any deals ever and just getting going, and, read a book on real estate investing, and now I really want to get into the game. And so can you send me all your multifamily deals? And oh, by the way, I want to do seller financing because I don't have any money, right? You got to fake it till you make it a little bit. And you also need to consistently check in with the broker. Those are the two things. We can unpack those in a second. But the last thing you also have to do is, if you want the broker to take you seriously, you need to take the broker seriously. And so if they send you some overpriced piece of garbage, underwrite it, go look at it, take it seriously. Guess what? That broker is feeding their family off of that deal. And until you realize that, you're feeding your family off deals that you do, it's also their livelihood to sell real estate opportunities, and they know it's overpriced. So don't be going in there and, nope, that's overpriced. No, I want an off the market deal, whatever. No, go look at it. Go take it seriously. Underwrite it. Put your best foot forward. Tell them why you think it's worth a certain number. You might not get it on first round, but a lot of deals that I've gotten came back around. So if you take the broker seriously, they'll take you seriously.
Yeah, 100%. And on the keeping top of mind there, I mean, I just had a story recently where there was this property, it was a triple net lease retail deal with a national, had national retail tenant type stuff. It was a fantastic deal if we could have a lease extension as a contingency in the deal. All right. So we made an offer. It was off market. There's another competing party that made an offer that was just cleaner than ours, because there was 2 years left in the triple net lease with the bigger tenant. And so this broker brought it to us, and we found out we didn't prevail. And then I find out that it fell out of contract. And the only reason I found out about that is because it appeared on LoopNet. And I was so mad. But I was mad. Like, first I had this visceral reaction that I was mad at the broker. And then I was like, you know what? I hadn't talked to this guy in 6 months.
Yeah.
And so, there's and a lot of these brokers don't have like a complicated CRM system that will like trigger like an automatic text message to you because you made an offer on it if a deal falls apart. Right.
Yeah. Wouldn't that be great? And they'd text you, say, oh, hey, Salesforce text you to say, oh, wait a minute, it fell out of contract. But like, they get, in this day and age, Matt, they're getting like a call an hour from a new investor. Right. And if you're not top of mind, they'll be like, Matt, who? Oh, yeah, you did bid that deal, because they're like on deal number 74 when that one fell out of contract, if that's deal number 1, right? So they've already long forgotten. The only way you stay in front of a broker is by constantly reaching out. Hey, how's it going? You got to be their friend in some ways. I mean, I'm like buddy with most of my brokers, because they need to look at me that way. And they need to know I can close. They need to know I'm funded, and they need to know that I'm going to take their deals seriously no matter what it is, and regularly check in. And you got to be the belle of the ball regularly to kind of check in. And, hey, how's it going? I'm over here. Just so you know, I'm over here. Just pop an email. Hey, anything going on? Anything new? Just make yourself a note every week or 2 weeks to send a quick line to your broker. If you're local to them, take them out for coffee every month, something like that. Check in. They wouldn't mind. They want serious buyers.
Totally agree. Great advice. So let's bring it a little bit step forward here. So fell out of contract, the deal is now in your court, right? What happens from there specifically?
So this is why I had to sign a piece of paper that said I wasn't the guy's uncle or his nephew, right? They were asking 3.9. Okay. Winner to contract at 3.9. We'd offered 3.35.
Mm-hmm.
Okay. And the agent's like, no way he's going to take it. And I stayed in touch with him, like, hey, how's it going? And then a lot of the units are subgrade, meaning like they're below, like if you're standing in the unit, you can see the earth at about eye level,
Yeah.
and so the buyer did not like that they were subgrade, even though there's drainage, they've never flooded ever. And they're however many years, but the buyer didn't like that. Okay, fine. We were willing to deal with it. But it turns out that the seller's mortgage was coming due and he had not told his broker that. Right. And so when that buyer fell out, he's like, oh man, what am I gonna do? I got to refinance. I got to get out of this thing. And the broker said, well, all I got is this guy, my buddy Matt out of New Jersey. And he's already bought from me. I know he's already got some of the equity lined up. I know he can handle this deal. It's just that he's at 335 and I know you don't want to do it for that. And the seller cut him off and says, he's at 335. Let me talk to my partner. I'll call you right back. Right. Mm-hmm. And so we got it at 335. I went out there and the property had a couple of gazebos. I sat down at the gazebo and me and the seller sat at a gazebo and talked about the deal. And then I took him out for a beer and me and the seller over a beer closed the deal. I think I came up a little bit and he agreed to a small concession on something else and we're able to put it together. So the second lesson there, Matt, is you never know if you're going to get a deal if you never make a bid. And so I recommend to your listeners that even if it's an embarrassing offer, put it in writing, because especially in this day and age where things might correct a little bit, your second offer that you put in writing is way better than the offer that the number you were thinking that you never said, because it's not their whisper price,
Mm-hmm. Yeah, absolutely. I agree. So next step, we're talking about what was the total capital stack? We're talking about purchase price, and then what was your debt and equity mix, and what was the structure like?
You're asking me to think back a little bit, Matt. This was like 7 or 8 years ago, brother, but I got you. 2.5, 2.6 in debt. 335 was the buy price. This was back before deals became crazy debt yield restricted and stuff like that. We were borrowing at 3.7, I think, was our interest rate. Mm-hmm. No interest only, just fully amortized 30-year amortized debt, 5-year fixed. Raised $1 million, which gave us 1% acquisition fee, a $50K in startup cash, and then some other closing costs and stuff like that.
So the $1 million, was this the most amount of money you ever had to raise?
By far. Just double what I'd ever raised before. I'd raised 500K before, and that was a grind. So we raised $1 million for this one, and we had to bring in 2 capital partners. I'd actually just joined an organization called GoBundance at the time. And one of my buddies was in GoBundance, and he was able to reach into GoBundance and get me a few investors from there. And I joined as a member as well while we were looking at the deal. So that helped in that and gave me some cred. And so I was able to meet some of these guys face to face. And these are all local Philly guys that lived they knew where Lancaster was and all that. So they were able to get in. My local network, my mama wrote a check and got into the deal. Really grateful she did. And a lot of my prior investors, this deal, we number all of our deals, right? This was DeRosa Capital 7, which means that's just not my lucky number. There was a DeRosa Capital 1 through 6. Mm-hmm. So a lot of the investors in DC 1 through 6 got into DC 7 as well. So, but it was still a grind to put together $1 million in equity.
So what was the grindy part?
Okay. The hardest part of capital raising is it's 2 things. It's number 1, getting eyeballs on the deal, right? Getting people to look at it. And if you got a good mailing list, you know how to do the webinar game, and you know how to do the follow-up game and that kind of thing, then that diminishes a bit. But in the beginning, getting people to even look at your opportunity is a challenge. The second thing that's the biggest grind in anything in raising capital and in selling in general is getting people from a maybe to a yes. Like, mm-hmm. I'll take yes, I'll take no. I don't care. No's great. I love no means no more work to do. You're gone. Bye-bye. Nice meeting you. Keep you on my mailing list. I'll put you in my newsletter, right? Yes is fantastic. Yes is pop the champagne. That's awesome. It's those stinking maybes, Matt. And then they forget about the thing. And then they, well, let me think about it. Let me talk to my wife. And is this going to this or this, they want to ask more questions. So that was the grind about it, was getting the maybes to either be a yeah, are you a yes or a no? And so you end up having to over raise a bit or get people beyond the soft commits. Like, we're in the middle of a raise right now. we'll probably lose around 500K in people that soft committed, said, yes, I will invest in your deal. Mm-hmm. Wait, I changed my mind. Yeah. Or all of a sudden they realize they have to send their kid to college next month or something like that, that they can't give us the money. So that's probably the biggest grind, Matt.
Mm-hmm. Yeah. The maybe definitely maybe definitely is oxymoron, but
I'd certainly maybe. Absolutely. Let me think about that, about yes, about maybe. Yeah.
Yeah. I think the thing that drives me insane is to send me something over. Maybe send me something over. So you send, the deck over to them, and then you have to keep checking in on, oh, did you take a look at it? Because if you would have told me no, but send something over anyways, like, it probably would have been less motivated to reach out to you. Because I understand, educate yourself.
Yeah.
But that's definitely the difficult part there. So in terms of newer investors that you were adding to your network or adding into this deal that you'd never had done a deal with before, where do those relationships come from outside or even inside of the guys that came in from GoAbundance?
Yeah. Well, some of their existing investors, GoAbundance, and then for this particular deal, existing investors, GoAbundance, and then new folks that had joined our mailing list, and so we weren't sure. It's kind of like a shotgun approach kind of thing. Like, I don't know if these folks can get in or not. We'll find out. Because anybody listening, first of all, we all need to have a website, right? And so on your website, you can't. Guys, listen, SEC is not going to let you be putting on your website like, hey, I'll pay you an 18% IRR rate of return. Just give me your email address. Nope, that's called a solicitation. You can't do that on your website, right? But you can put out there, hey, if you want to hear good stuff that we're up to, join our mailing list. And so it got to the point where we were getting good, traction on our mailing list because we put ourselves out there, social media, YouTube, and eventually, Bigger Pockets writing articles for them or appearing on podcasts such as this one. And whatever you guys do, have a website that there is a funnel. And then you produce a monthly newsletter. And so we had people signing up, dozen a week or dozen a month or whatever it is. And so people that had joined our newsletter were aware of what we were up to. And so when we had a deal, we blasted it out to the newsletter list, which at the time was maybe a couple hundred people. And so some new people that had heard of us, one person on a newsletter list that invested in the deal was the brother of one of our current investors. Just wanted to hey, my brother seems happy. I'll just start tracking you guys. And we had a deal, and the guy books a call with me on Calendly. And I'm like, your name sounds familiar. So that's how you end up putting it out there. So you got to have at least a way for people to easily follow you so that when you have something, they know about it, make it easy for them. Yeah.
No, that's great advice. So Matt, we have 1 minute left of our recorded show.
Oh no.
So tell the audience what this deal did for you in your life.
I make a good amount of passive income off of it. It's been a great cash cow. It's been a great vehicle for us. I'm very grateful for it. It's something I can point to as a large-ish syndication that we've done. And so when people ask about it, I can point to it. We've also refinanced it now. And so we've returned a lot of investor capital, and some investors have gotten bought out of the deal by me. So I've required more and more ownership of that property. So it is something I'm very proud of. It's something I'm very grateful for. And it's a testament to, buy real estate and wait kind of thing, because the rents have gone up over time. I got in and rents were $825. Rents are now $1050 on the same units because I've owned it for like 7 or 8 years. And that's what just changes over time. So that deal's just been a great testament across the board. And it's something I'm very grateful for. It's my air quote favorite. We love all of our children the same, but it's my really favorite property. So.
Excellent. Well, Matt, we have our live studio audience patiently waiting. And so we got to cut the show now and head over there. So if you're listening to this now and you want to get in on live Q&A with absolute real estate titans like Matt Faircloth, Gino Barbaro, Chris Seveny, Reed Goosens, Brian Burke, Stephen Libman, the list goes on and on. Make sure to join the Facebook group that we formed called the Go Big Live Real Estate Investors Facebook group. And you can get in on live Q&A with guys like Matt Faircloth. So thanks a lot, Matt, for being on the show. I really appreciate it.
You got to say Reed Goosen's name with an Australian accent. Reed Goosen, his lovely accent, his chiseled features, that guy, yeah, he's a personal friend, so I can make fun of him, but yeah.
All right. Well, sounds good. Signing off.